In this video we are going to talk about Gazprom stock. So before starting this video, please like this video and subscribe to our channel for future updates. On the last trading day, Monday the 14th of June 2021, the public joint stock company Gazprom stock price rose 0.52%, from $7.67 to $7.71. The stock varied 0.65% throughout the day, from a low of $7.68 to a high of $7.73. The price has increased in 8 of the last 10 days and is up 7.98% in the last 2 weeks. On the last day, volume declined by -157,000 shares, resulting in a total of 164,000 shares being purchased and sold for $1.26 million. You should keep in mind that declining volume on higher prices generates divergence, which could be an early warning sign of potential changes in the coming days. In the short term, the stock is in the middle of a broad and robust rising trend, and a continuation of the trend is expected. Given the present short-term trend, the stock is anticipated to climb 27.93% over the next 3 months and, with a 90% likelihood, conclude the period with a price between $8.97 and $10.62. Signals and forecast. The stock of the public joint stock company Gazprom has buy indications from both short and long-term moving averages, indicating a positive outlook. In addition, the relationship between the two signals produces a general buy signal when the short-term average is higher than the long-term average. The lines at $7.61 and $6.88 will provide some support on corrections down. Sell signals will be issued if any of these levels are broken below. On Friday, April 9, 2021, a buy signal was sent from a pivot bottom point, and it has since risen 34.91%. More upward movement is expected until a new top pivot is discovered. Negative signals were also sent out, and these could have an impact on the near-term trajectory. Furthermore, the 3 months moving average convergence divergence is currently indicating a sell signal, MACD. During the previous trading day, volume decreased while the price increased. This results in a divergence, which may or may not be regarded an early warning. Support, risk and stop loss. On the downside, the stock finds support from accumulated volume just below today's level at $6.14 and $6.01. When a stock is testing a support level, there is a natural chance that it will be broken, causing the stock to fall to the next support level. In this situation, public joint stock company Gazprom finds support at $6.14, which is barely below today's price. If this is broken, the next accumulated volume support levels will be $6.01 and $5.97. During the day, this stock moves on average, but be wary of low or falling volume, as this raises the risk. The stock changed $0.0500, or 0.65%, between high and low on the previous day. The stock has had a daily average volatility of 0.87% over the last week. The public joint stock company is a company that is open to the public. On the RSI 14, the stock of Gazprom is very overbought, 94. This significantly raises the short-term risk. $7.51 is our recommended stop-loss level, -2.62%. Due to the stock's medium daily swings, it has a medium risk. The RSI 14 is 94, which significantly raises the danger. A pivot bottom found 45 days ago has given a buy signal. Analyze the basics: good fundamentals and a stable firm. Gazprom is one of the most undervalued energy equities on the market, with a market capitalization of only $54.19 billion. The company's sales climbed to $123.4 billion in 2019 from $118.01 billion in 2018, and the company's growth projects will ensure that the numbers continue to rise in the future. We may also see that this stock is undervalued when we compare total stockholders' equity of $232 billion to market capitalization of $54.19 billion. Gazprom's profit grew to $19.3 billion in 2019 from $20.8 billion in 2018. But the company's stock slid through support on concerns about the coronavirus COVID-19 pandemic. Another piece of information for potential investors is that in the last 3 years, This firm has paid out more than $12 billion in dividends to its shareholders, with the possibility of even more in the future. Gazprom just reported a 17% drop in Q2 net profit year-over-year, but the main cause for this is the economic consequences from the COVID-19 spread. In 2019, Gazprom sent 300 million cubic meters of gas to China, with the good news that the business plans to enhance shipments to China in the future years. Technical analysis. The price is approaching psychological resistance. If the price rises above $5, psychological resistance, it will be a buy signal, and the road to $5.50 will be clear. The continuance of the bullish trend is supported by a rise above $6, and the next price objective might be around $7. If the price continues to fall in the next months, any price between $3.50 and $4 could be an excellent time to buy this stock. Gazprom's financial resources. The importance of natural resources cannot be overstated. With a 16% share of the world's natural gas reserves, Gazprom is the largest company in the world. Under PRMS criteria, we're talking about 24.396 TCM of gas in 2019 and 177.1 billion barrels of oil, natural gas, gas condensate, and oil. Despite certain challenges, Gazprom was able to maintain its significant market share in Europe, exporting around 200 billion cubic meters of gas each year. Natural gas output in Europe is declining, yet there is significant possibility in the near future. Nobody expects Gazprom to take over the entire European gas market, in my opinion. There is far too much opposition, and the energy policy emphasizes gas import diversification. Nonetheless, Gazprom's exceptionally competitive pipeline gas pricing, declining indigenous output, and vast reserves will ensure a large long-term market share in Europe. Flying under the radar. Despite its vast resources and potential, I have the notion that Gazprom continues to fly under the radar. Some of the possible reasons are discussed later under risks. The amount of followers on Seeking Alpha is a basic indicator. Many investors come from North America, therefore I understand why corporations like ExxonMobil, XOM, Chevron, CVX, Royal Dutch Shell, RDS, A, NYSE, RDS, B, or BP want to invest in SAW, BP. However, more individuals are following Equinor, EQNR, a much smaller Norwegian corporation, on this platform, which I don't think makes sense. ExxonMobil has a price-to-book ratio of 1.67, Chevron has a price-to-book ratio of 1.63, and Shell has a price-to-book ratio of 1.1, whilst Gazprom has a price-to-book ratio of 0.40. Other significant indicators, such as the price-to-cash flow ratio, paint a similar picture, indicating that the stock is undervalued in comparison to its peers. Dividend policy. The major reason for investing in the energy industry is to get a consistent income from dividends. Gazprom has been paying dividends for a long time, but they have never been steady or transparent. The management established a new dividend policy in order to make the company more appealing to investors. A clear methodology, dividends based on IFRS net profit, an adjustment for non-cash items, and a payout ratio increase from at least 30% to at least 50% within 3 years are among the new policy principles. The new payout targets, however, are only applicable if net debt/EBITDA remains below 2.5x. Given the present low level of only 1.1x, this shouldn't be a major issue. With these improvements, investing in Gazprom has never been more appealing. The new dividend policy is clear, and after years of large investments, it's time to put shareholder returns first. Uncertainties and risks. We've covered many favorable elements of Gazprom so far, but there are a few drawbacks to consider. Because the Russian government owns the bulk of the corporation, there are obvious political dangers. When sanctions against Russia are debated, Gazprom is frequently mentioned as a target or as a possible target. Sanctions have caused a significant delay in the Nord Stream 2 pipeline project. FX headwinds can have a detrimental impact on the business from a financial standpoint. Furthermore, there are questions about how cost-effective the Power of Siberia contract with China is in the long run. Some perceive it as nothing more than a political maneuver. Finally, while switching from coal to gas makes perfect sense in terms of reducing emissions, natural gas is still a fossil fuel, and opposition is mounting. Is it a good idea to invest in Gazprom stock? Several short-term signals, as well as a generally positive trend, are positive, and we conclude that the current level may represent a buying opportunity, as public joint stock company Gazprom stock has a strong possibility of performing well in the short term. Gazprom has a market valuation of only $54.19 billion, making it one of the most undervalued stocks in the energy sector. In the last 3 years, Gazprom has paid out more than $12 billion in dividends to its shareholders, with the potential for considerably more in the future. Gazprom's stock could be a solid investment, and most financial analysts believe its price will climb significantly over the next few years. What are your thoughts on our video? Please let us know in the comment section below. If you enjoyed this video and would like to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.